Hello, good evening, everyone. My name is Tumishe Olaoluwa, and this evening, at this webinar, we'll be looking at how to trade forex. How to trade forex. This webinar is going to be more practical. However, I'll be walking you through the slides and also the MT5. So we'll be looking at how we can apply what we're going to learn tonight on MT5, right? How many of you are with me? And let me know your location, your name, your location, where you are watching us from, in the comment section below. So share with me. I want to know, where are you watching us from and from which location? Okay, awesome. So how to trade forex. Now, any transaction that is carried out in forex has a period of time in which it's being carried out. So when you open a position in the forex market, which is either you open a buy position, you are buying a currency against another currency at a particular given rate, or you are selling forex. Now you are selling the currency against another currency. Right now, so when the market is when you are buying, it means that you are expecting the price to rise, and that's why you are buying, right? And when you are selling, it means that you are expecting the price to fall, and that's why you are selling. So we want to look at orders. What are orders, and what are types of orders? Now, as the name implies, order. Now, it's just like me telling, okay, I can see Utman Olarewaju joining me from Nigeria, Dengba Mary from Aja, Lagos, okay, Gina from, okay, he said Ali Buka from Nigeria in Ogun State, Samuel Oluwatosin. Okay, great. Great to have you guys on board. Now, from the word order, right now, imagine let me use Utman Onlarewaju. I give an order to Utman Onlarewaju to go and buy a particular pen for me, right? Now, I told Utman, I said, Utman, take this 100 naira, go and buy a pen for me. Now, I need the pen, right? I gave an order to Utman to go and buy a pen. I need the pen, but Utman is the one I'm giving the order to go and buy the pen. Possibly Utman knows where to get that specific pen I am talking about. Now, and Utman goes and buy the pen, right? Because I have ordered him, right? Because I have ordered him. Now, coming to forex now, an order is like an instruction that a trader, you and I, will give to our broker, telling our broker to carry out a certain action for us, right? We are now saying, my broker, carry out this certain action. That is an order. You are telling your broker, when the price gets to this particular level, it is only when the price gets to this particular level I am interested in buying. So when it gets to that level, buy for me. Now, you as a trader, you have given an order, an instruction, right, to your broker to carry out a particular action for you, right? Now, an order, from my slides here, it says an order is an offer sent using your broker's trading platform to open or close a transaction if the instruction specified by you are satisfied. Basically, the term order refers to how you will enter or exit a trade. So now it refers to how you want to enter a trade and how you want to leave a trade. You want to exit a trade, which is very important to you, because you don't just want to jump in and out of a position, but you want to wait for a particular price level to play out. Probably you are waiting for a price, the price to get to a particular level before you now determine if you want to buy or sell. Now we'll be going into more practical aspect of this to have a view of this, right? But now we have two different types of order, right? We have market order and we have pending order. Market order and we have pending order. Now when we talk about market order, you are telling your broker to buy for you, to buy a particular currency or sell a particular currency for you at an immediate price, at the current price level. So let's say we have let me get my pen. Let's say we have Euro USD, right? Euro USD. Now an Euro USD is trading at 1.025, right? I'm creating that assumption. Euro USD is trading at 1.025 now, and you believe that Euro USD would move up, right? That the price will or probably the price will fall, and you are only interested in buying at, let me erase this. Okay. Now you are only interested in buying when the price falls to 1.110. Now, which means you are not interested in buying this particular currency when the price is at this level, right? But you are waiting for the price to fall down to this level before you now decide that you want to buy it, right? So you are waiting for the price to get to 1.110 before you buy. Now this order, you will now say, okay, let me give an instruction to my broker, right, to sell, or sorry, you want to buy at this level when the price falls down to this level, to buy at this level. Now that instruction you have given to your broker to buy at this level is a pending order, right? Because a pending order is an order that is executed at a later time, right? It's an order that is executed at a later time. But a market order is an order that is executed immediately. So now trader A believes that this market is a bull market. The price, he believes that Euro USD will keep going up. Now trader B believes that this price will fall down to this level before it starts going up. Now trader A buys at this level expecting that the price will go up, but trader B now sets a pending order. Now trader A also took an order which is a market order. He bought at the immediate price level. Now trader B is now buying at a pending order, which means he now sets an order here instructing the broker that until this price falls to this level, don't buy. Until it falls to this level, don't buy for me. When it gets to this level, buy for me, right? So now you are not buying immediately at this level. You are waiting for it to fall down to this level before you now buy. This is a pending order. A trader A who buys at the current market price has only taken a market order. Trader B who is waiting to buy at a lower price has only set a pending order. I hope we are getting it. Awesome. Okay, someone is from, okay, I can see Kashif from Pakistan. Oh, great to have you here. Joseph from South Africa. Okay, awesome, fantastic. I'm sure you are getting value from this evening's training. Okay, I can see Ayogbonga from South Africa. Fantastic. Now there are different types of pending order which we are going to have a quick look into, right? Now these are types of order. We have the market order and the pending order. I've explained it, right? Now the market order, you can buy and sell immediately at the immediate market price. Now but for pending order, you can either set a buy stop or set a sell stop or set a buy limit or set a sell limit. Now, I would want to take you through, bore you around the slides. I would dive right into the MT5 and show you how to set your buy stop, your sell stop, your buy limit, and your sell limit. Great. So let's go. Let's go practical. Fantastic. So we are on MT5 now. So I have this trade here, Euro USD. Now, as you can see, that the market is in a bearish movement. The market is moving bearish now. Okay. Now, if at a point I now want to set my buy stop. Now, don't forget. Now, let me give you a quick explanation of what buy stop is, what sell stop is, what buy limit is, and what sell limit is. Now, look at this. I want to create some levels here. Now, I want to explain buy stop. Now, if I strongly believe that my judgment of buying Euro USD is until price comes up to this level that I've drawn a line, 1.16827. That until price comes to that level, right, I won't buy. Do you get that? So now, if at this point here where I have this price, let me move it down a bit. Okay, now I believe you can see it now. Now, if at this point where I have this price 1.16702, now I believe that if this, not until price reverses back to this level of 1.672, I won't buy, right? But I'm only interested in buying when price gets to 1.6702. Now, what I'm going to set in this place is what is called buy stop. Which is, buy stop is the order that is set above the current price. So it means you, the trader, you are only willing to buy above the current price rather than buying below the current price or buying at exactly the current price. Now, a buy stop is that order that you set above the current price, which means you are giving an instruction to your broker to only buy for you above the current market price. So not until price gets to that level at which your buy stop has been set, your buy stop won't be executed. But once the price reverses back from this current place back to this place, now your broker would now execute the instruction you have given to them, because that buy stop is an instruction that you, the trader, have given to your broker to only buy for you when the market gets above the current price in which you are placing that order, right? So now the current market price here is this green. Can you see this green here? We have 1.16024, right? This is the current market price. But you the trader, you are not willing to buy at this level, but you are willing to buy when the price has risen up to 1.16702, right? So now that level at which you, the trader, you are willing to buy above the current price, is that level is called your buy stop. That's where you're going to set your buy stop. Now, how will you set your buy stop at that level? So now you come here, you come here. Once you left click on your mouse, you come to this place, right? Can you see what you see what I do? I will do it again. So the level at which I am willing to buy is this 1.16702. right? Now I come here, I left click on my mouse. I use my mouse to left click on it, and I go straight to this place. It's called trading. Then these options will come out, right? Can you see buy stop here? Now I click on buy stop. Okay, I agree that okay, I'm the one that want to take up this buy stop. Now I click on buy stop, right? Now do you see what happened there? Now which means, can you see it here? Buy stop 0.1, which is my lot size, at 1.16713. So which means until price comes up to this level, my buy won't be activated. So now, as you can see now, this is the current market price, but I am not willing to buy at that current market price. I am only willing to buy when the price has come up to my level where I have set my buy stop, right? Okay, now if you want to edit your buy stop, you can modify it, because where we marked out to set our current our buy stop is 1.16702, right? Now, so I will now come here. Can you see? You can either delete it or you modify it. Now let's modify. So I want to modify. Let's modify it now. That's okay. I want to modify my buy stop to modify my buy stop to 1.16702, right? Yeah, modify. Now do you see that it has come to our exact level? How many of you are seeing it? How many of you are seeing it? So now, how many of you have gotten what I just explained right now? How to place a buy stop and what buy stop means. Let me know in the comment section. Let me know you are following me. Let me know you are getting value from this webinar. Drop it in the comment section. Are you getting value from this webinar? Do you understand what I just explained now? Can you now place a buy stop on your own? Let me know in the comment section. Let me know in the comment section. Let me know in the comment section. Let's be spontaneous about it. I want to know in the comment section, did you understand what I just explained right now? Okay, so why I wait for you to drop your opinion and okay, following. Okay, your ring, they said following. Yeah. Okay, you don't get the modify part. All right, now I'm gonna go over it again. Okay, David said sure, I get it. Okay, I'm saying all good, well understood. Now someone said he doesn't understand the modify part. So now you can see, you can either drag to modify. Can you see what is shown on my screen here? Look at that mouse region. It says drag to modify. So if I want to modify, if I want to drag my buy stop downward again, can you see how it's moving? So I can even modify it, dragging it, right? So I'm modifying it, dragging it. So I've modified it below again, right? But the reason why I fixed it, I modified it to 1.1670 is because that was the specific area of interest I am willing to buy, right? So if you want to modify it back to that area, now you can either use your mouse to drag it into that spot, right? Can you see now? Can you mouse to drag into that spot, or you come here, you left click, you see either you modify or you want to delete. So you now click on modify, right? You see here we have price, we have stop loss, we have stop limit price, we have take profit, blah 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 blah. So here is what you want to modify, the price. So you now come here and say you want to modify it to 702, right? So it's still on that same spot, and then you click on modify. I don't know if you get that now. Fantastic. So now let's jump on stop buy stop. Sorry, I said buy stop. We just explained buy stop. Now sell stop, right? Now don't forget I said buy stop is when you are willing to buy above the current price, which means the current price is below, but you are not willing to buy below, you are willing to buy above it. So when you set it until that price gets to that level, your buy your buy position will not be executed. Now let me dive down straight into sell stop. Now as you can see here now, right? What if, let me delete this buy order. Now what if I from my analysis, I now feel if this price gets to this level, now if this price gets to this level, sorry, now I feel if this price now gets to this level, then price might continue to fall. Do you get that? Now if I say, okay, now if this price now probably, let me see, okay, probably I feel, okay, now that this price is so low to this level, there might want to be a reversal. And if there is a reversal to this level, price will continue to fall, right? But okay, price may continue to fall if it reverses to this level. Probably price will just come up here. Let me see if I can draw an arrow to illustrate what I'm saying. Okay, now if I say, okay, now probably I say, okay, price might come to this level, right? And when price comes to that level, then price might now start falling back again. I'm trying to use that arrow to create something visual that you can see and imagine. Okay, awesome. Now if I believe that, okay, price might reverse back to this level, and when it gets to this level, it will start going down again. But you know that I can, if I sell at this current price, which means I'm executing as market order, I'm selling at the immediate market price. But if I don't want to sell at the immediate market price, now, like if I don't want to sell at the immediate market price, and I believe that price would come up to this place before going down, then that is what we call sell limit. So now if I am willing to sell above the current market price, that is sell limit. Okay, now but let me quickly explain that sell stop before going to sell limit. Now sell limit is like the opposite of buy stop. You know, in buy stop, let me delete this so we don't get to, now you know, in buy stop you are buying at a level that is above the current price, right? Now so also in sell stop you are selling at a level that is below the current price. Now look at this place. Now we have the current price trading at 1.16030, right? Now but you now believe that this price is still going to fall further. I don't know if you get my point. Now if you now believe that this price is going to fall further, but you're not willing to sell at that current price, you want to sell below that current price, you will now set your sell stop. I don't know if you get that point, my point. Now you will now set a sell stop. Now let me see if I could, okay, now look at USD CHF. Now if you look at this price level, now you can see that price is trading above at 0.93492. now price is trading at 0.93495, right? But you believe that this price is going to fall, right? Is going to fall. Now at this level here, you want to sell when you want to sell when the price is falling, right? You want to sell below the current market price. Now that is your sell stop. You now have to set a sell stop because you are willing to sell below the current market price. Now, how do you set your sell stop? It's almost equivalent to how you set your buy stop. Now let's try something out here. So you click on it again, you go to this place, trading, you see sell stop has showed up, right? Now you sell stop. Can you see that? Can you see what it does here? Now you can drag it to adjust it. Like I said, you can adjust it down to this level if you are willing to sell only when price gets to this level, right? If you say no, I'm not willing to sell only when price gets to, I want to sell below. If you are willing to sell at any price level, you are willing to sell below the current price is a sell stop you would have to set. Now I give a recap. Now a buy stop is an order that you set above the current price level, which means you are instructing your broker that you are willing to buy this particular currency above the current price level. Now for sell stop, you are giving an instruction to your broker that you are willing to sell below the current price level, right? So now, as you can see practically, as I'm showing you now, you come here, you can set this, we've set it now, sell stop 0.01. You can see it here, sell stop 0.01 at 0.933303, right? So you can see there, it's obvious. Now this sell stop order will not be triggered until, let me use this object to illustrate for us, until this price level comes down here, right? So until this price level comes down here, so if this price level comes down to this level where my sell stop is, then the sell stop order will be triggered, right? The sell stop order will be triggered, and the expectation is that price would keep falling, right? That is the expectation, that you are setting a sell stop because you believe that if the price gets to that level, the price will keep falling. I don't know if we are getting it. Okay, awesome. Chris said great work. Awesome. Now we've understand sell stop and buy stop. Now let me have a quick explanation on sell limit and buy limit, right? So I will delete this so that we can have a quick explanation on sell limit and buy limit. Okay. All right, fantastic. I believe you guys are following me. Now, what is buy limit and what is sell limit? Now, buy limit is the opposite of what you do with buy stop. So in buy stop, price is already going up, but we are not willing to buy at that current price. We are only willing to buy at the higher price. It's just like now, this pen is trading for 10 naira today, right? But you say, okay, I will only believe that this pen would trade higher than 10 naira when it gets to 15 naira, right? Now, so instead of you buying this pen today at 10 naira, you now wait. Tomorrow they now tell you that the pen is 15 naira. That's now the time that you are willing to buy. So you now go and meet the seller of this pen that, okay, I know that this pen is 10 naira today, but I'm still looking at it. So if this pen gets to 10 naira and gets to 15 naira, buy 20 packets for me. If it does not get to 15 naira, don't bother buying. I don't need it. Because you believe that if it gets to 15 naira, it would most likely cross 15 naira to 20 naira, and then you are now willing to sell at 20 naira so that you can make 5 naira gain, right? you can make gain from the price difference. So now, just like a buy stop is, you're not willing to buy this pen at 10 naira, but you are willing to buy it at a higher price at 15 naira. So you now give an instruction to your broker to only buy this pen for you at 15 naira. That's buy stop, right? Now for buy limit, now this pen is trading at 10 naira, but you now told your broker who is selling this pen that, okay, don't buy this pen for me at 10 naira. When this pen falls to 7 naira, buy 2 packs of the pen for me, right? So now you are not buying above the current price, which is done in buy stop, but you are buying below the current price. That's buy limit. So now, instead of you buying this pen at 10 naira, you have now set a limit that, okay, you are only willing to buy this pen when it falls further to 7 naira. So now that's your buy limit. So now your order won't be executed if this pen does not drop to 7 naira, right? So when you give an instruction to your broker to buy this pen for you at 7 naira, when the pen is currently trading at 10 naira, your broker would only wait for a time when the pen will drop to 7 naira before they buy. That's your buy limit. You are buying below the current price. Your buy stop, you are buying above the current price. I want to believe you've gotten it with this illustration I've given you. Excellent. Now, let's talk about sell limit. So now, just like we've explained buy stop and sell stop, sell limit explanation is not far-fetched. Now, a sell stop, this pen today is selling for 20 naira, right? Now, but you have 2 packets of this pen with you. Are you with me now? You have 2 packets of this pen with you, but you are not willing to sell this pen at 20 naira because you are still looking at how the trend or the market is going, that this pen might still go up, but if it falls from 20 naira to 15 naira, then I am willing to sell off everything. That is your sell stop, because you are willing to sell below the current market price. That's your sell stop. Now, this pen is trading for 20 naira, but you are only willing to sell when the price gets to 25 naira, which means you are only willing to sell above the current market price. So you now instruct your broker that only sell this pen for me when it is 25 naira. So until your order gets to until this pen's price in the market gets to 25 naira, your broker would not sell the pen, because you have instructed your broker, which is order. You have instructed your broker to set a sell limit order for you above the current price. So you are only willing to sell when the price is higher than the current market price. But your sell stop is when you are only willing to sell when the price is lower than your current market price. I believe with this illustration you should have gotten it. So let me know. Okay, someone said it's clearer now. That's Chooks Jack. And Odave Odafe David said great. Okay, another person said yes, everything is all good. Okay, someone said thanks OctaFX. Yes, you need to appreciate OctaFX for the value that is being dished out. Okay, yeah. Now you could see I've explained those 4 orders for you. In fact, that has summed up every other thing I want to talk about already. Everything I want to talk about already, it has summed it up. I'm talking about now. I've already explained to you how to open an order. I've explained to you already. Everything contained in this slide, I've explained to you how to open an order on MT4, how to open a buy stop, a sell stop, a buy limit, a sell limit. I've explained to you that a buy stop is an order that you place above the price above the current market price, and price keeps going up. Your buy stop is an order that you place below the current market price, and price keeps going up. Now your sell stop is an order that you place below the current market price, and the price keeps going down. And your sell limit is an order that you place above the current market price, and your price keeps going down, right? So everything I've explained in our short practical session, right? In our short practical session, I've explained everything. Now let's talk about the bull and the bear. The bull and the bear. Now a quick one. Let's go practical. I think I'm loving it practical than the slide. So now the bull and the bear. Now what do you think is happening on USD CHF? On this chart that you see now, what do you think is happening? Welcome Chudu Bliss from Abia. Okay, someone said great delivery. Thank you. Okay, now what do you think is happening on this chart here? You can see the price, jumping up in such an aggressive manner. Now, what do you think is happening here? This is a bull market, a bull run. When market consistently moves higher and higher and higher, you can say the market is in a bull market. Now, what do you think is happening in Euro USD? This is a bear run. When the market keeps moving downward, downward. That's what a bear market. Yeah, a bear market. Okay, so here we have a bull market. As you can see, we have a bull market. Price keeps moving up. Let me see what we have here. Okay, we have a bull market here too. Can you see a bull market? I want to use this line to give an illustration of what I'm talking about. You can see. Oh, come on. Okay. Sorry. So market is in a bull market. See, price keeps rising. That's a bull market there. Price keeps rising. That's bull. Then the bear price keeps falling. That's the bear market. Price keeps falling. Right? That's a perfect illustration. Every other thing is theory, but it's practical. Perfect illustration of what. So now, what's going on here? What's going on here is that there are more sellers than there are buyers. So more persons, institutions are buying the dollar and selling off the pound. Right? They are buying the dollar and selling off the pound. More persons are selling the pounds and buying the dollar. Now, in this place here, we see now that more persons are buying the dollar and selling the Swiss franc. Right? They are selling Swiss franc. So that's what's happening in the market right now. Okay? Fantastic. So now, a quick illustration. Now, how much does a pip cost when working with one lot size? Now, a lot size is a minimum quantity of security that may be traded, while a pair is the smallest amount. Why a pips is the smallest amount by which a currency code can change. Right? By which a currency code can change. Okay? Now, someone look at this illustration here. It said, as an example, because standard lot size is 100,000 units. So now, a pip in a standard lot size is $10. That's it. A pip in a standard lot size is $10. Right? Awesome. So you can just grasp this, look more into the lot size and understand it perfectly. Now, okay, how to place, we've already done this, how to place pending order and the likes. So I want to believe that you have gotten a practical example and a hands-on experience about this, right? So let me know if you have any question in the comment section below before we round off now. No, it's not only working on MT5, it's also working on MT4. Okay, someone says, who controls the price? Demand and supply. Demand and supply from institutions. Do you get now? So it's just a law of demand and supply. It's just like now when you get to, okay, let me use illustration of this pen. Now I have this pen, right? 10 people, 10 persons came demanding for this pen because they've gone to search around and they did not see. So they saw this pen with me, right? And I only have one left. And each of these 10 persons wants to buy this pen. If this pen, if this pen was originally trading for 20 naira, what do you think would happen? Someone among the 10 will say, don't worry, give me the pen, I will give you 100 naira. Someone else said, no, I will give you 200. Someone else said, don't worry, I will give you 500. Someone else said, see, I am ready to pay you 1,000 naira for this pen. Now, what is driving the price of that pen up? Demand. So when there is high demand for a commodity or an asset, what do you think happens to the value of the asset? It runs up, it increases, right? So demand and supply is what moves the market. Demand and supply is what moves the market. Okay, Odave says this is amazing. Yeah, I'm glad. Okay, he said, how are you going to get a broker? Please, been wondering. Okay, now OctaFX is your go-to broker, and that is why they are bringing this excellent webinar to give you an expository knowledge into how to trade forex. So now it is electronic. So now the illustration I'm just giving, I'm just trying to simplify it. So when you are setting your buy order or your sell order or your sell stop, right? Like I have set my sell stop now here, is electronically I am giving an instruction to OctaFX to sell for me, to sell this currency for me when it gets to that price level. So it's not like I'm going to call them. No, it's not like the old fashioned way. Everything is electronic now. So as I've set this order here now, it's automatic reflecting on their system there, and when the price gets there, it is executed because I've already set it. Do you get what I'm saying? So you don't need to bother about how will the broker know that you have set it. No, it is all electronic, right? Awesome. Someone said, great to have you, sir. My question is, when I set the pending order, for how long would it last? And can I set the pending order only for a particular time? Okay, now when you want to set your pending order, it doesn't matter how long it lasts. In fact, you can set it now and the next 1 hour it is executed already. But you can set it now and in the next 24 hours it has not gotten to that price level, right? So that's why you call it pending order. It is pending. So if the price gets there in time, fine. If the price takes time to get there, also fine, right? So I would like to call this meeting to a close. I really appreciate you guys for joining us today, and I look forward to seeing you in our next webinar. We'll be giving you very explicit explanation that you need on every area in forex. Don't forget to drop your comments in the comment section. Our facilitators would look into your questions and would pass it over. So thank you for coming around. Thank you for following through. Thank you for having me around. I look forward to seeing you in the next webinar. Thank you guys. Bye.